All right, so I think we are going to start our webinar tonight. And before we start, please allow me to do a short risk disclaimer for you guys. Tonight's webinar sessions is intended for educational and informational purpose only, and participants shall not take it as financial or investment advice, nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Q Prime and I hosting the sessions are not liable for any losses or damages resulting from the use of the information presented. Participants are responsible for independently verifying information and considering their own financial goals and risk tolerance. And just a kind of reminder, Forex trading can be considered as a high-risk investment. You need to trade with your good control and risk management. So now we are going to start our webinar tonight. Today, we are going to discuss about Forex and commodities things. I will try my best to let you guys understand more on what is the main fundamental that the traders need to understand before they trade with Forex and other asset classes like gold and then oil market. Later, I will also do a quick analysis for you guys to let you guys have a clearer idea on what's the actual fundamental that can actually affect the price movement. I will do the live analysis for you guys. So this is a highlight that we are going to discuss today. The first thing is we will discuss about the factors that have impact on US dollar. Why are we focused on the US dollar instead of others major currency? Is because US dollar can consider one of the most important currency in the world. And then the central bank will actually use the US dollar as their reserve to protect their own currency. And then US dollar can consider as one of the safe haven asset investment, and their movement and any policy regard that will be affecting the movement of the US dollar will actually affect the world. So this is why we try to focus more on the US dollar, and then we will try to link the movement, the relationship between the US dollar with other asset classes. For example, we will try to link the dollar with the gold movement, because sometimes for gold, we don't have a lot of latest fundamental to updates every day. So how can you analyze the gold movement? Is by identifying the movement of the US dollar. We will try to understand what is the overall economic conditions in the United States, and then what is the movement of the US dollar, and then we try to link it to the gold market. And then their relationship between the dollar as well as for the gold, they are normally negative correlated. So to put in a simple way is, when dollar go up, normally gold price will actually drop. I will explain it more deeply later. And then I will also update you guys on what is the latest, the most crucial economics calendar that we need to focus on this week to have a well prepared for you before you enter and do the trades. And then we also provide you some market insights, that where can you find our market insights that enhance your trading journey. So these are all the highlights that we are going to talk about. All right. So the first thing should be discussed on what is US dollar or dollar index. So in terms of dollar index, you can notice on the MT4, we do have the dollar index, and then there will be a lot of people, including Bloomberg Investing, they will normally update the movement of the dollar index. But what is dollar index? So dollar index is a measure of the value of US dollar relative to a basket of foreign currency. It consists of 6 currencies, which often referred to as America's most significant trading partner. That includes the euro, Swiss francs, Japanese yen, Canadian dollar, British pound, and krona. So to put in a simple terms, explanations for the dollar index is, by looking at the dollar index, we're able to compare dollar movement with other 6 major currency movement. So for example, if dollar index going up, there will be a reason that the main reason that caused dollar index go up should be the appreciation of the US dollar. Because US dollar are going up, that's why dollar index going up. But we can also use the dollar index analysis touch towards other currency. For example, the reason being why dollar index going up is not only purely on the dollar appreciations, we will also link towards others currency movement. For example, you can notice here we do have the 6 currency, right? For example, if euro dropping, Japanese yen are dropping, Canadian dollar are dropping, this is also the things that can cause the dollar index to go up. So it's not just US dollar go up, then dollar index will go up. No, they are actually comparing other 6 major currency. So by looking at the dollar index, we're able to identify the overall movement. So if you are going to look at the dollar index chart, you can notice recently a lot of investors are trying to shift their portfolio towards US dollar. So the demand for dollar are going high. But if we are not just only focused on dollar, the reason being why dollar index go up is because of other currency like Swiss francs. They are dropping aggressively. So just a kind of reminder, we do notice previously the New Zealand Central Bank just announced to cut their interest rates aggressively. And this is the first central bank they are actually cutting their interest rates. By doing so, when interest rates are low, a lot of investors are start to selling off Swiss francs, which causing the CHF to drop, USD CHF to go up. Later we'll have a more deep explanation on why is the interest rates very important. Why do the forex trader need to understand what is interest rates? Because interest rates is the main thing, one of the most important things that are going to affect the movement of the forex currency. So the reason proven example that link towards interest rate should be maintained on the USD CHF. So this is because CHF going down, so overall USD CHF going up. So why is CHF gone down aggressively? It's because of the interest rate decision. Later I will explain it more detailed. Okay, so US dollar and the forex market movement, why is dollar very important? Is because US can consider one of the main economy in the world. People will normally try to identify the overall economic growth in US to see whether the growth are good or bad, and then trying to focus on the global economy. Now, for example, if they do notice that US economy are improving aggressively, so people will be expecting that currently the overall economy should be very, very good, then maybe it will attract investors to shift their portfolio towards other asset classes instead of gold. So this is why we need to focus on US dollar, because dollar is the key highlight compared to others currency. And as comparison with dollar and China, right? Why you don't want to focus on China? Because if you focus on the Chinese currency, renminbi, normally there will be a solid currency interventions for the Chinese authority. So for example, if you notice on the RMB movement, their movement are normally flat because the government is going to intervene their currency. So for example, if the RMB drop too aggressively, the Chinese authority will normally buy back their own currency and push up the prices. This is the reason why both can consider one of the major economy countries around the world. But why are we focused on the US instead of China? Because Chinese government will normally intervene their currency, but US dollar will normally reflected in the free market movement. So by looking at the dollar charts, we understand whether the economic performance in US is good or bad. Then we're trying to identify other asset classes movement. Okay. Just like we have been discussed about the economy and then the currency movement, right? We mentioned that if economy is good, investor will normally invest in their country. But we just saying economy is good is not enough to support us, right? That's why we need more data proven. Like for example, I say the US economics data are very, very good in the first quarter of 2024, but how can you prove it? So we are trying, there are actually tons of the economics data around the world that you need to be focused. But I actually filter it out, all of the economics data, and mainly focus on these 3 data, which is the gross domestic products, GDP data, employment data, as well as inflation data. Okay, so you understand that normally, right, most of these economics data, normally we do have a lot of economics data, but for new trader, you actually don't have to focus, or maybe you just focus on these 3 major data. It's already good enough for you to identify whether the economics of that country is good or bad, then helping you to decide whether you want to invest in that countries or not. So forex movement is like that one. We need to identify what is the best economics performance country as difference in contrast with the equity market. For the stock market, right, we need to see their profits in the company, how much they are earning, what is their client base, what is the supply side, what is the costing, things like that. But in forex movement, we are looking on more towards macro fronts. Is the country geopolitical stability, is the country political stability, or if the country economies perform good or bad, but how we identify is by looking through their economics data. So forex trading should be a bit easier compared to company because this data will normally release out towards maybe investing.com, like famous platform. So you don't have to calculate it out by yourself. For example, you said that GDP is good, that means the currency might be going up. But how you calculate the GDP? Actually, GDP is not one of the considerations for you to think how to calculate. There are tons of the platform will actually provide you the data. So it's very easy. You just compare the actual reading and economist forecast to identify whether currently the country economic growth is good or bad. So remember, three data is very important for us to focus on: GDP, employment, and inflation. And why is data very important is because forex trading, investor will normally invest in the countries that have a good economic growth. So how you identify good economic growth country is by looking through the economics data. Okay, so normally I show you something. You can see that normally we can just reflect it from the economics data. So you can see this is one of the example. I jump first. So you can see that we do have tons of the economics data that's going to release later tonight, which is the US GDP data, US initial jobs claim. And then for trader, you just wait and compare the actual reading and then the market forecast. So normally you compare these two. So for example, on Monday, new home sales, their reading are actually declined from the previous reading of 664K, declined to a 662K, but the reading and also worse than the market expectations. So after this data release, we understand that the US home sales are not as good as expected. It might be trigger certain sell-off. So this is how we compare. So for new trader, you don't have to worry about it because this data will be calculated by the government, the regulator. Okay, so economics data is one of the key things that very important in fundamental analysis for the forex. If you go through all the Bloomberg investing.com, they will normally update that because of yesterday US released a very good data or very bad data. That's why dollar go up or go down. So you can understand like that. Don't have to think in a too complicated way. Okay, data is something that should be simple to understand. Then the next thing that we are going to move on should be on the Federal Reserve, which is the US Central Bank. This is the things that are very important for everyone. As we mentioned just now, interest rates will actually affect the currency movement aggressively. So for example, if the current countries, the central bank decide to increase the interest rates, their currency will normally go up. So this is a jobs for the central bank. And US Central Bank, the full name is what we call the Federal Reserve. So this is the things that we need to understand on it. So Federal Reserve is the central bank that decide whether they want to increase the interest rates or decrease the interest rates. The point in a simple term is Federal Reserve can make the significant movement of the forex currency, because if they announce that they want to increase the interest rates, right, the dollar will normally go up aggressively. Okay, when they announce that they want to decrease the interest rates, dollar will be dropped. So why is interest rate very important? Why they want to increase or decrease is because they want to control and stabilize the inflation. So for those new traders, I give a brief explanation about what is inflation. Inflation is what we call the price of goods sold in the world. For example, if the price on daily use, their price keep increasing, everyone is going to suffer, right? Because this is a daily use product. And this is what we call inflation is going high. But imagine if your salary increment is not able to catch up the things that the price that you guys want to buy, then a lot of people might be suffering. So it's what we call the inflation are very high. That's why a lot of people are suffering. Then the central bank would decide to increase the interest rates in order to stabilize the inflation. So why is the relationship between interest rates and inflation are related? Just now you understand that inflation is what we call the cost of goods sold, right? The price of everything. So when the price of everything become more expensive, everyone is going to suffer. To control this, they will normally increase the interest rates. But how? So I give you one of the example. So what thing will cause the price of goods going up is because a lot of people are going out and shopping and do a lot of consumer spending. So how can you reduce all those consumer spending in the world? So we can reduce the consumer spending that lead to high inflation by by increasing the interest rates. So for example, if one central bank announced that they want to increase the interest rates, you can think in two ways. The first way is when they increase the interest rates will normally link towards the borrowing costs. So high interest rates, borrowing costs should be higher. Higher borrowing costs, you are not going to purchase car or houses. For example, now, previously the interest rate is only 1%. You borrow 1,000 ringgit from the bank to buy your car, you just have to pay $10. But everything have been changes. The central bank decided to increase the interest rates because they don't want people to spend too much in order to reduce the price of goods sold. So imagine now the interest rates increase from the previous reading of 1% towards 10%, right? When you borrow 1,000, you need to pay back to the bank on $10. So of course, you might be rethinking again whether you want to borrow more or not, because your costs of borrowing are now higher. It will normally discourage you to borrow money and buy car, and buy houses. So when interest rates higher, nobody is going to buy houses or car, for example. Then of course the price of this thing will normally decline. So when the prices decline, inflation will be stabilized. So now we already understand why the central bank want to increase interest rates, decrease interest rates, because they want to stabilize the inflation. Later, I will give you a more live explanations on it towards the charts. So now we need to understand interest rates is because interest rates links towards exchange rates. So normally trader will try to forecast whether this central bank would likely to increase the rate or not. If they believe this central bank is going to increase the interest rates, their currency will normally go up even before they make the announcement. Okay, so one of the good explanation is we move back towards 2024 during COVID period. If you guys still remember, 2020 during COVID periods, economy have become very, very bad. That's why the Federal Reserve decided to cut the interest rates. So why they want to cut the interest rate is because they want to encourage more consumer spending. As you mentioned, interest rates linked towards borrowing costs. So when interest rates higher, borrowing costs higher, nobody is going to spend their money. But when economy is very bad, government want to boost up the overall economic growth. How are they going to do it? They should be do by reducing the interest rates. So when you reduce the interest rate, right, borrowing costs should be reduced, and lower borrowing costs will actually encourage more consumer spending in the world. So more consumer spending, of course, prices will go up again, inflation become stabilized. And then when they announce they want to cut interest rates, their currency will drop aggressively. So let me show you the charts and remove all those small support and resistance level. It should be much clearer. So this is 2020 when COVID outbreak happens around March. The central bank decide to the first reactions for dollar go up is because this is the thing. The first reactions for the dollar to go up is because of a lot of investors try to shift their portfolio towards safe haven dollar. So dollar is also safe haven, but after that you can notice dollar is actually dropped aggressively. Then after that it's rebound back. This explanation is mostly will link towards interest rates, right? So why is dollar dropping aggressively? It's because during these periods, the Federal Reserve say because economy is not that good already, people are entering recessions. In order to boost up back the economy, they will decide to cut the interest rates. So in this time, they cut a lot of interest rates. So when you cut interest rates, nobody is going to invest in dollar again. That's why dollar drop. First reactions. Then after that, we do have a lot of things happen, like Russian and Ukraine war, which caused the inflations lead towards 40 years high in the United States, if you guys still remember the history. Because of this war, the prices increase aggressively because Russia and Ukraine war will normally affect the supply side. For example, it will likely to reduce the oil supply, cause the oil price to go up aggressively, and lead towards a high inflation. So when this thing happens, the Federal Reserve actually decide to increase their interest rates. So after they increase the interest rates aggressively from the previous reading of 0 and increase until the peak of 5 to 5.25%, you can notice on the dollar charts, it's actually increased aggressively. Until recently, Federal Reserve do believe that inflation already stabilized down. You can notice previous inflation hit 10.1, more than 10% before. After that, inflation started to stabilize down. the central bank start to provide a dovish statement, or they mentions that they are no longer want to increase the rate, the interest rate is already in the peak, no more increase interest rates, then dollar drop back aggressively. And then you can notice, right, recently the overall trend for the dollar are keep consolidating. Why is this thing? So why is this thing? Why consolidating? It's because now the Federal Reserve member are actually in a very, very complicated view. They're not sure whether they want to increase the rate or not already. They're already stuck. So how can they identify more evidence to decide whether they want to increase the interest rates or decrease the interest rates? Is by looking through the economics data. So in here, everything is clear because if economy is bad, that's why they cut interest rates. And then in here, everything is clear. High expectations, Fed is going to increase the rates. That's why dollar go up. Then in here, this is the thing that we are going to suffering right now. So because we are not sure already whether the bank want to increase or decrease, because if you look towards the economics data, they are very weak. They are very mixed. For example, 1 week US economy data released, and then most of the data show that US economy is good. This is the reason that caused dollar go up. But suddenly next week, US economics data become bad again. So the currency drop back. So now even the central bank also don't know whether they want to increase the rate or not. That's why their statements are very mixed, and they keep mentioning to continue to monitoring the economics data. This is the reason why after the clear movement for the dollar we experienced, but now in this year 2024, the overall trends for the dollar are quite unclear and in the consolidate zone. But as a trader, of course, we cannot give up even it's in a consolidate zone. So how can you identify the trend for the dollar? And then how can you know whether the dollar is going to going up in next quarter or going down? So how you understand it is by looking through the inflation data. They're very important, especially and talking about the inflation data, we do have one very important inflation data that's going to release later this week, which is what we call the PCE price index. So inflation data is one of the key things that global trader need to be focused on. Normally before COVID things, investors will focus on the non-farm payroll. But after that, after the COVID and the inflation things coming out, the interest rate decisions become the key highlight that global trader is going to focus. That's why, as for now, as comparison between the non-farm payroll and others data, for example, inflation data should be more important compared to non-farm payroll. So if you notice, and for experienced trader, you have been experienced before, anything regarding on the CPI data, core PCE price index data, PPI data, after the data release, right, the dollar movement is very huge. And then gold price will be also affected. So I will tell you how can you identify the data. So normally, for example, we do have the PCE data that's going to release on 3:30 p.m. GMT plus 3. And then normally you can just compare the actual reading and then as well as the economist forecast. Normally, if the actual reading a lot higher than maybe 0.3%, this means that the inflation in US is very high, dollar will normally going up because they expect that because this inflation is very high, soon Federal Reserve will provide a statement regarding of increasing the interest rates. So interest rates is high, currency is going up. So this is how you think. But to shortcut it, you just understand it as when you notice inflation rate is high, inflation data including core PCE data, CPI data is very high, then there will be chances for the dollar to going up. Okay, so this is normally how you analyze the data. So this is a key thing, and normally data is one of the considerations, but of course, you need to focus on other things also. Other things like Federal Reserve statement, they will also say they want to increase the rate or they don't want to increase the rate in their statement. And then we do also have the FOMC meeting minutes. This thing is going to discover on what the things that have been discussed before. And then Federal Reserve then do have a lot of different members, and then most of the members have different view. So according to the meeting minutes, we can able to understand what is the majority view for the Fed member towards the interest rate decisions. So interest rate is the key thing that we must be understanding in 2024 for all those traders around the world, you need to understand it if you really want to prepare for yourself to trade with the forex market. Inflation rates, Federal Reserve statement, interest rate decisions is one of the key things, and it's going to affect the market aggressively. That's why we do provide this webinar for you to let you guys have a brief understanding of what is interest rate. And then the news will normally also updating about Fed. They say what, and then, for example, Jerome Powell recently just mentions they want to cut interest rates in June, and then this is the reason why dollar dropped. And then if the inflation rate very high, then the Federal Reserve might be considered to increase the rate and dollar going up. So these are the things that you need to understand on it. Not only economics data, but what's their statement. And interest rate decisions and statement is also important. Sometimes they will normally set the interest rates within market expectations, but sometimes, for example, Swiss francs, a lot of economists are expecting Swiss francs, the Swiss National Bank, to maintain the interest rates instead of cutting it. But unexpectedly, the central bank decide to cut their interest rates. So after this move happens, right, CHF really dropped aggressively, that leading to a higher momentum, bullish momentum for the USD CHF. This is the reason proof towards the relationship between interest rates and currency. So CHF dropped because Swiss National Bank cut their currency. That's why USD CHF going up. This is the reason why dollar going up. Okay, so please go and understand what is the interest rates and try to apply towards your daily trading journey, because as I mentioned, this is one of the key important things that traders need to understand on it. So after we understand about the importance of the interest rates, now we need to focus on, so you know interest rate is going to affect the currency movement, then what are you going to do next? What do you expect about the Federal Reserve interest rate decisions? So if you are going to, according to FedWatch 2, CME FedWatch 2, most of the analysts, economists are expecting the Federal Reserve will normally maintain their interest rates on 0 BPS. They maintain, they do not increase or decrease. The percentage is 91%, but only 9% people are predicting the Fed should be cutting their interest rates. Because as for now, right, majority of the people are thinking the Fed should be maintain the interest rates instead of cutting it. You can notice on the dollar trends are actually slowly going up, because normally previously, right, the Fed is actually mentions that they want to cut interest rates a lot of time before, but end up unexpectedly they do not do it, and then now they try to maintain interest rates instead of cutting it. So this is a good news for dollar, and then this is also the reason why dollar going up. But of course, this probability will change every day. What is the thing that can affect the movement of this probability is economics data. So economics data is really very important for you to focus on it. So when economics data provide a very good reading, inflation is very high, then this probability of maintain interest rate should be higher instead of cutting it. But if the economics data showing that overall US economic growth very bad, inflation have become lower and lower, then it helps, then high chance they will be cutting the interest rates. Okay, so interest rates, and then the very high expectation is this. And traders, please try to focus on this data and then monitor on this FedWatch 2 to decide to have a clearer pictures on whether the Fed want to cut interest rates or not, then link towards your trading strategy. So dollar update, the most crucial update already given to you. I hope you learn about the most important, one of the important fundamental. Economics data and interest rates, monetary policy decision is a key thing. And next thing we are going to move on towards the gold market. So in early webinar, we have been mentioned, right, when dollar go down, gold price will normally go up and vice versa. So for example, dollar go up, gold price will go down. So why is things like that? It's because you need to understand that dollar and gold, okay, for example, USD, XAU USD, right, is actually formula related lah. XAU USD, when USD drop, XAU USD will be going up. And you can also understand it as dollar and gold are both safe haven asset, means they are one of the substitutions. So for example, if two two asset classes are safe haven. If the gold price are going up, right, why don't you sell your dollar and shift your portfolio towards the gold and vice versa? For example, if dollar are going up and they are safe haven, their value is good, increasing more aggressively compared to gold. So certain investors will decide to sell their gold and buy dollar. But there will be also chances that dollar and gold price both increase. For now, now is one of the example lah. You can see that gold keep going up, dollar keep going up. Why is this thing happen like that? It's because of now the market risk appetite are very weak. A lot of investors are fearful in the market. That's why they're thinking to buy safe haven asset. No matter dollar or gold, I just buy. Investor just buy. It means that currently the risk appetite in the market is not that good. Why? It's because now we understand we do have a lot of geopolitical tensions around the world. The first thing is regarding on Russia and Ukraine. Until now, they still haven't have any deal yet to solve the war issue. And then we do have the Israel and Hamas war. The ceasefire negotiations are still ongoing, but until now, they still don't have any resolutions. And of course, later this week, we do have a lot of crucial economics data. So certain investors might not want to take the risk. They're afraid that after this data release, the movement is very high. I don't want to take this kind of risk. So a lot of investors will worry about it. That's why they will also think to shift their portfolio towards the safe haven asset. So this is the main few reasons that cause dollar and gold price to go up. So to move back towards the gold fundamental, right? Normally, gold is very simple for us to understand. First thing you need to understand is you need to understand the dollar trends. Dollar drop, gold price will go up and vice versa. The second thing is you need to understand the risk appetites in the market. For example, there are a lot of war ongoing in the market, or the economic crash, geopolitical tensions are rising, US president elections in 2024. Market uncertainty very high. So this is a key thing that will normally cause the investor to shift their portfolio towards high risk asset like equity market, and then they shift towards it to gold prices, because gold is one of the considerations as a safe haven. So put in a simple term is high risk in the market, gold price will go up. Low risk in the market, gold price will normally drop. Okay, just understand like that. If you notice any war news, then maybe this is a key thing that might be cause the gold price to go up. And if you see this party already ceasefire and then we don't have much geopolitical tensions already, then investor will have more confidence, more risk appetite. They will shift their portfolio towards other asset classes, like higher risk asset classes. Next thing that we are going to talk about is crude oil. Crude oil is also one of the crucial commodities that we can trade around the world, because we do have the crude oil news almost every day. So a few things that are happening for the oil market recently. If you are looking at the charts, you can notice overall trends for the oil are increased aggressively in a positive consolidated range. But after that, it's dropped back mostly due to technical corrections. But in long-term basis, you can still notice recently overall trends for the oil are good. And why is that so? Very simple understanding is a few fundamentals that can cause the oil price movement. The first one is economic growth. So for example, Chinese economic growth, US economic growth, this is a key thing that will normally affect oil prices. So how you link the economic growth towards the oil prices? I give you one of the example. Imagine economy are very good and your company are earning a lot of money. They give you a lot of bonus, a lot of salary. So you receive a lot of money. So when you have money, what are you going to do? Of course, you are going to travel around the world. Some of you and most of you is going to travel around the world, go through others' country, spend their money. So when this thing happen, right, travel around the world, right, of course, what make you travel to others' countries by airplane, right? And then what can cause airplane to fly is by petrol. So when they travel around the world, the usage of the petrol increase, demand for oil will actually increase. So put in a simple terms, normally if economy is good, more people travel around the world, oil price should be going up. It's not only demand side. On supply side, oil will also have a significant movement. Supply side, like maybe OPEC want to cut their productions and there is rising tensions in Middle East, and Ukraine are keep attacking Russia's oil refinery things. This will cause supply to drop, increase the oil prices. OPEC statement is also one of the key things that we can focus on it. because OPEC will normally give statement out saying they want to cut their productions by how much, they want to increase their productions by how much. So three key things that you can focus on it right now for the oil movement. First thing is global economics outlook, especially China. As for now, Chinese economy are not as good as expected already because everything starts to slow down. And then any chances that Chinese authority, Chinese central bank decide to cut the interest rates, implement a lot of stimulus plan to boost up the Chinese economy, and end up if the Chinese economy really recover very good. Few things that you can take into consideration. First thing is you may be considered to buy China stock, or you can think whether you want to buy oil market or not, because China is one of the major oil importer around the world. So you can just use Chinese economy as a benchmark to decide the trends for the oil. Simple. The next thing is just focus on the Russian and Ukraine war, whether the tensions have become worse or not. If tensions become worse, Russia can consider one of the oil exporter around the world. And then if any issue happens in Russia, they are not able to export the oil, supply for the oil will drop, oil prices will going up. OPEC is very simple. Normally, they just provide a statement. They say they want to cut productions, means oil supply will drop, prices will go up. So this is the key three things that you can understand to identify the oil market. Now you already have a brief understanding about what is the main fundamental that's going to affect the dollar, the gold market, the oil. Next thing, we are trying to update you on what can you focus on this week. We do have Wednesday, still have spill data. Wednesday, we do have crop inventory. Thursday, we have GDP data from UK, from US, initial jobless claim data from US, Chicago PMI. And then we also do have one core PCE data from the US also, inflation data. So this is all the key data things that you need to focus on it, especially on Thursday market. We do have GDP data, you need to focus. We could be expecting there will be significant movement for the dollar on Thursday. But Friday, just a kindly reminder, Friday is US holiday. So when US holiday, not US holiday, sorry, it's a Good Friday holiday, a lot market should be closing. So we do have very important data like core PCE price index data to be released on Friday. But due to market close, the market movement will be very slow. As a trader, we need to prepare for next week trades. So for example, if you look at the core PCE price index data released, high reading, and then you look at the dollar charts, no move, you need to remember it's not because of this data is not important. It's because of due to US holiday, due to Good Friday holiday, US market were closed, so no movement. But for those traders who want to trade on Monday, you need to prepare for significant market volatilities, because when they miss out the trading opportunity on Friday because of holiday, a lot of traders will take the chances on Monday. So when a lot of traders around the world try to play around it, of course, the movement should be high, especially for dollar as well as for the gold, because traders will prepare on Sunday, Saturday, Sunday, digest all the data and do their trades on Monday. So you need to remember, new trader, I would not advise you guys to try to trade on next Monday because there should be a big movement after all of these data release. Okay, so be careful on it. But of course, if you really love risk, you love excitement, then maybe you can try on it. Okay, so this is an important thing that we can focus in this week ahead. And normally, after updating all of you guys on everything, right, then maybe you might be wondering, how can you get the news? Some you guys can be generated from Bloomberg, investing.com, but we can actually, as a Pure Prime, we do also actually provide you guys a market insights update. Like, we will try to shorten everything for you. We will try to analyze for you on certain asset classes. Then you can just go through it, read through it. So Telegram group is one of our sharing with all the traders. Like, we are not going to ask you to buy on certain things, sell on certain things, but it's just purely on market update. For example, what happens to dollar yesterday? Why is dollar going up? Why is dollar going down? So you can just have a brief understanding on the markets before you enter and do the trades. So we also do provide the market insight in our Pure Prime platform. Feel free to visit us. The difference between the market insights in Pure Prime and Telegram group is Telegram group should be shorter and fun, more fun, but market insight should be longer, a little bit boring, but more professional. We do include around 9 crucial asset classes analysis for you guys. And then if you are really interested, we also do provide webinar weekly. You want to learn things, we also try to help you guys. Okay, so this is how you gain more market insight. Instead of go through investing.com Bloomberg like long article, maybe you can try our article, try our Telegram group to see whether it helps you or not. So this is our Telegram group. Feel free to follow us if you want. And I think that's all for tonight's webinar. Okay, so I'm going to open